Hi, this is Joe. So we're going to talk about the S&P, and I'm going to go into some history on bubbles, historical speaking, even ones going back to 1600. So I think it's worthwhile to go back and look at how these develop, what they look like, and where we are right now in relation to that. But first, I'm going to talk a little bit. I'll give you an update on the S&P real quick. So let's go to the charts, and I'm using a slightly different setup because it's going to be a little briefer. I did want to mention on a monthly basis. So my book, Invest Like a Pro. I talk about a specific pattern called a pinch play in there off the MACD. And if we look at the monthly chart, what's developing here, there's a few things that are not great about the pattern because you got back above the 18 and the 40, and they're both rising on the monthly chart. But if you notice, the MACD broke below its signal line and it's sort of pinching in underneath this line. So if this month were to finish out like this, and then next month we take out the low of this month's bar coming and breaking underneath that, that would signal a pinch play sell off the monthly. Now, I don't typically do these off of just a single time frame. I usually like to look at the next time frame. And if you go down to a weekly, the thing that's bugging me is that we're really kind of going in the opposite direction. In fact, it's almost trying to set up a pinch play to the upside. So I really question whether we're going to get this signal right away on the monthly. I wouldn't be surprised if we jostled around a little bit. And I think you're going to be better served, even if this triggers on the monthly chart, to wait for the same pattern to develop on the weekly. It's going to be a little while for it to develop. And that's why I've been saying I think the higher probability is that we're either going to chop around or we're going to grind higher. If they get this thing going to the downside, let me go ahead and go to a lower time frame chart. So I've got the daily here, and we've broken the trend line that we had in place, and we've come up and we've tested this high, and now we're coming back down, but we haven't taken out this low. And in order to get the 1, 2, 3 change in trend, you're going to need to take out that bottom to confirm on a daily chart that the trend has shifted back to the downside. And even when that happens, it's just increasing the likelihood that you're moving down. It's not like it's an automatic, because you really need, so you've made a low and then you've made a lower low. And then if you take out this trend line, you'd make a lower low. But you really need to make another lower high to really confirm that you've turned the trend to the downside. You need a series of lower highs and lower lows. So this is where the probabilities go way up if we break this trend line. But I did want to clarify that. I make mention of that in my book. I go into a little bit more detail. So just make sure it's something that you do need to understand. If we go to an hourly chart, I'm going to go over on here and look at the hourly. This is back to what we've been talking about for what seems like forever. And what I'm looking for is, can this fail here and cause red DI to turn up above 25? I'm looking for this pattern. We have not had it. And there's no reason to go short if your hourly can't turn the ADX down and get the sellers to take over control. There's just no reason to be a strong seller of the market. We got to wait for that to take place. That's really what we're on the lookout for. If this pushes up, higher in the morning and crosses back above the 40 on the hourly, odds are this is going to dip back down and green's going to cross over, and we're going to be in the same position we've been in for months and months and months, where they try and break it. They get this spike in the red, and then it can't hold. Spike in the red, can't hold. Spike in the red, can't hold. Spike in the red, can't hold. So the question is, one of these times it's going to hold, and we're going to get a more meaningful decline to take place. Right now, it looks more like choppy action between 3,000 and 3,200. So we're going to talk a little bit about bubbles. If you look on the website, you can see that I wrote a book on the history of the Dow Jones going back. I used 5% swings, basically a wave chart going back to 1898. So I really like looking at history. I think it's important. And what I'm going to do now, I'm actually not going to just use the Dow Jones. I'm going to use other bubbles, historical bubbles. And I want you to just understand where I'm coming from and what I'm looking for. And I don't have a bone to pick. I mean, if we're in a bubble, I'd be happy to say that we're in one right now. But I'm not convinced based on the price action that it meets the criteria for me of a bubble. And I'm going to show you some great examples. I think it'll be pretty worthwhile to listen. So let's just get going. The first chart I've got here is the tulip bulb craze from the 1600s. And, there's not a lot of history going back. It's not like I can get a weekly chart of open, high, low closes of tulip bulbs going back that far. So the nice people from Elliott Wave obviously put out some of this stuff, but and they've got a pretty good sense of humor if you look at how they showed where it ended down here. But the funny thing is, and one of the things I really want to point out and what I liked about this chart, because I had different choices, but I picked this one out, is notice the slope shift. So if I were to look at this and say, okay, this is one. In fact, I'll just, that's one trend line essentially right here. And then we can draw another trend line here. If you notice this slope shift as you make a higher bottom and move up, and then you shift your slope again. And then you do it one more time here. Okay. And then you can do it this time. And notice what happens. The trend is almost vertical. The trend line is actually essentially just going straight up and down. I mean, it's not, it almost looks like the stock is going up and to the left. So that type of pattern, that parabolic movement, is really what we're trying to identify. If we're in a bubble, this is the type of price action you should expect. And there should be a very strong there should be one phase, at least one, of really strong acceleration straight to the upside without any interruption whatsoever. So the number of times that you accelerate, you really can't define that. A lot of times it's only 2 or 3. I know that, 1, 2, 3, 4, this is 5. I mean, that's pretty serious. You're reaching a pretty good parabolic movement. Let's take a look at a few others. So again, I mean, if we went through the same process, you had a trend line here, and then I could draw another one here and draw another one up this way and another one this way. And again, this last one's almost vertical. So you're on the lookout for where you go from a sequential wave, which is a nice orderly uptrend making higher highs and higher lows, to an accelerated, really aggressive upward trending move. And once you get into that surging market phase, you really want to use tighter trend lines, and you're really looking for in a bubble, so you can have an accelerated trend or have accelerated trend lines, but never reach a bubble point because you don't have this movement here, this accelerated move that's really uninterrupted. And that to me is the difference between, just your average ordinary surging market move and one that I'd classify more as a bubble. As we work through time, so if you notice, that was the South Sea situation back in the 1700s. So I'm trying to work my way through the Dow Jones back in 1929. So this doesn't even compare if you looked at the movement of the tulip bulbs compared to this. And the fact that, the value of the tulip bulbs relative to its true value, it's kind of nuts what happened there. You can argue that the market is worth more or less, but it's hard to make a big argument looking back that tulip bulbs were worth what they were worth at that point. So while I've been discussing here, I'm looking at another situation where we accelerated the trend line, and notice this big move, this big burst of energy to the upside without interruption. To me, that is the difference in where you start reaching a bubble phase where you don't have any kind of massive retracements along the way. It just keeps accelerating and keeps making higher lows until basically the bubble bursts. Let's just go through. Now I'm looking at the NASDAQ composite back in the 1999 to 2000 peak. And again, it sort of started off fairly slow, really, when you look at it, because you had this trend line and even gave back a lot back in 98. And then you started to accelerate. And although this did give back some along the way, these were all higher bottoms. So it was starting to accelerate. But then look at what took place here. I mean, this is pretty amazing. So again, when you look at it, it went from maybe 1,000 to 5,000 over the course of a year. So it doesn't compare again to something like the tulip bulb craze, but at the same time, look at the acceleration at the end of the move and how far it went in such a short period of time. That's the difference, and that's where you got to have a very heightened awareness that there's significant risk in place. I'm going to start working through. So here's Qualcomm, same idea. In 1 year's time, the stock went from essentially $5 up to $100. At the time, this is actually post-split. I mean, it was actually that peak. I remember really clearly sitting at my desk, and I remember it opened up the new year in 2000 up 50 points at 500, and I'm like, oh my God, this is unbelievable. That was it. That was the peak, and that was pretty much the peak for the bull market in a lot of ways as well. So anyway, notice the acceleration, and this really took off from 30 and just kept going. It had a couple hesitation weeks, but really just kind of went crazy to the upside. So I hope you're getting the point here. Netflix is pretty unique because in 2011, it was kind of all by itself. It was just off, and people were just thought this was the greatest thing since sliced bread. And I think the CEO thought that there was nothing he could do he couldn't do anything wrong. And I think he raised the price. I don't even remember now, but he did something. And it just caused a big cascade to the downside. But if you notice, the same kind of price action. And the one thing missing here really was the dynamic stretch of accelerated price move. But it was so persistent to the upside, I wanted to include it in the classification. Here's the classic one of Bitcoin that really is, I think, the present day version of it. Now, let me make sure I clarify this, because it's not the same as tulip bulbs, because I do believe there's value here. I don't think this was just made up and everyone went crazy like they did with the tulip bulbs. But in this instance, it went so far beyond its value. And the price action is a classic look. This is the one you want to print out and put on your wall. Because if you can understand this price action and how it took place, and the fact that right at this peak, literally on the day that the futures started trading, that was the peak in the market. So it's a classic one from a standpoint of the way it accelerated. It went through a period of, it took its time to get going. And then once it got going, it really took off from basically 10,000 to 20,000 in a very short period of time. So that's the classic pattern that I would consider to be a printable version that you'd want to put on your wall to make sure, okay, this is what a bubble looks like. Let's go through. Now I want to go to present day. I mean, we've been working our way down towards, the Bitcoin that took place back in 2017. So we're now in present day. This is what the S&P looks like right now. And to me, if you go back and look at some of these other charts, it just doesn't. Look at the acceleration factor in something like Bitcoin and look at what's missing here. You don't have that accelerated move because you keep getting knocked down. Every time this thing tries to get going, it gets knocked down. Now, I actually think if we didn't have the virus, I wouldn't be surprised if you took this move here. I wouldn't be surprised if you did that. And then we would have had it. We would have had the acceleration move take place. But what we're doing right now is making up for the decline. So I don't think you can classify this in the same way. I mean, it's very possible we could end up doing, one of these deals for a while. I don't know. But the fact of the matter is, unless we go through a period where we skyrocket to the upside and make very little effort on the pullback and then go again, and so we can accelerate that trend line, I don't think you can put this in the same classification. Go through the prior charts. I mean, if you have to go back and look at them, make sure you know. I would print out a couple of these so you really know what the look of it is. This is the NASDAQ. Yes, it is closer to what we're talking about, but it's still the same thing. These big drops in 2018 and 2020, early 2020, they just interrupt the pattern. And I would have to say, if I were to go back and look, let's just drop back to the NASDAQ. If I were to look at this pattern and say, where are we right now? I would think we're closer to 98 than we are to 2000. So, I mean, I'm not saying that we're at either one of those spots right now, and we might be somewhere in the middle. But I'm just telling you, if someone said, where do you think we are in relation to that time period? I would say we're more like 98 than we are like 2000. I think there's more room to the upside. If we get going to the upside and get back up through, 3,200, then, we could start to see a little bit more acceleration. But I think odds are we're going to consolidate. But either way, I just thought this was relevant to kind of go through. So, yeah, we're getting a little bit more strength in the NASDAQ. And then if you go through some individual names, Microsoft is showing more of the condition in place of this parabolic move with the accelerated trend lines continuing to go. The COVID virus did interrupt, the bear market really did interrupt this move, but it's back on track very quickly. And, if this goes from 200 to 300 in a short period of time, it's something you want to be on the lookout for. Adobe, same thing. It was on the same type of accelerated path, and it's gotten back on its horse very, very quickly. So those are pretty good examples. Dexcom is a smaller cap version. Notice the vertical move. Notice the change in the acceleration of the trend line, and then the vertical move. Another pop in that could be it could be considered sort of a bubble present day. And then let's look at something really wild, because this is the stock. This is a stock that was played by some of these guys on Robinhood. That playing these short-term patterns of stock and companies that are really questionable fundamentally, I'll say. But look at this. Look at the movement and how this is an hourly chart, guys. I mean, we're talking about an hourly pattern that looks very, very similar to the bubble patterns we were talking about that were weekly ones that took, took years to develop. This took place in about a month or two. Same exact setup and pattern. Climax with a big pop and gap up and reversal, and then you see the same kind of a decline that was just really rough, and really comes all the way back to the original breakout point. So anyway, I thought this was a real good example of how all time frame, you can see this type of stuff take place in all different time frames, and you want to be on the lookout for it. Print these out, make sure you know what they look like, because they can help you during even when we're not in a bubble phase of the market. Individual stocks can go through that. So I thought this would be worthwhile. Please make any comments below if this was helpful. If you want to see more information like this, please hit the thumbs up, and we'll talk to you soon.